Hi guys, hope everybody's doing good. This video will be going over how my portfolio is looking right now during this turbulent time in the market, and also share my own personal thoughts on how I try to navigate this during these tough times, but mainly from an emotional and mindset perspective here. I'll be doing my full video on my investing method in the coming weeks, so if that's something that interests you, please subscribe to the channel, and if you enjoy this video, please drop it a like, and I'd love to see your own comments in the comment sections below. Firstly, I think it's incredibly important to share my entire investing results here so you know exactly where I'm at. In 2018, I'd saved up about 60k of my own money, which is another subject I'll be doing a full video on as well. This money made up nearly my entire life savings, which I've phased into the market over 3 years, alongside an additional 12k in 2021. I had no investing experience or knowledge, but identified this as my investment vehicle of choice, which has turned into a true passion of mine. Talking through the information on the screen from top to bottom, my portfolio right now is about 84k. This is made up of the balance, which really is another way of saying the cash position, which is about 7,700, and the current value of the stocks within the portfolio shown by the value of 77,000. Right now I am down 16.4k, or about 17.56% of the invested amount of 93.4k. So if you're experiencing a downturn, I am right here alongside you. Now, down 17.56% does sound awful, but does this paint the full picture? And the answer for me is no. In actual fact, of the 72k of my own money invested, over the last few years by buying and selling stocks, I've made a realised gain of 29.2k. If I take away my current unrealised losses of 16.4k from my realised gains of 29.2, it gives me a value of 12.8k, meaning from the money I've put in, I'm still actually up 18%. Suddenly in the space of 1 minute, I've turned a negative situation to be positive. This chart shows the S&P 500's 30-year history. Why 30 years? Well, mainly because that's my age, and I'm looking at this information within my lifetime, and also the overall structure of the economy now is totally different to the 60s and 70s, etc. Overall, the market has more positive years than it does negative years, but I respect the fact that bad years can happen for numerous years at a time. Look at the year 2000, 3 consecutive downward years, each getting worse each time. The one question I ask myself at this point is, am I willing to invest during a similar downturn? And my answer is absolutely. I will always be investing in any market. Am I willing to have 3 negative years for 4 positive years? Yes, absolutely. And to flip that question around, look at the 3 years from 2019 to 2021, which all had exceptional performance. Now, am I willing to have 3 positive years and invest through the hypothetical negative years from 2022 to, let's say, 2024? And my answer again is yes, and I'll come back to exactly why that is later on in the video. But what I'm getting at here is that the market can and will go up and down for prolonged periods of time. Can you handle that, and are you mentally prepared for it? Markets undeniably go through market cycles. If you've never seen this chart before, it illustrates the rollercoaster of emotions through different phases of a market cycle. Euphoria, when we reach this point, which we could argue was last year, this is when the market is going up and up and up. Even the more speculative stocks are trading higher and higher, and at this point, this is when the market is setting up for an expected downturn. Then we progress into anxiety, onto denial. The longer and larger the downturn gets, we enter into the deepest and darkest of situations until we reach depression, which is where we start to question, why did I even bother investing if this is how it's going to go? At these points, this is when it's best to start buying stocks. Now, I can't tell you exactly when that point is and when to expect it, but even just holding through these different phases can offer great long-term results. And if you had to ask me personally, I think we're at the capitulation stage, and this is just my own thoughts. Fantastic, we've cracked it. Buy at the bottom, sell at the top, easy as that. The issue with market cycles, from euphoria going down to depression, is that these can be seen in daily, monthly and yearly trends. The upwards and downwards moves navigating through the market cycles can be clearly identified looking over a prolonged period of time here. Pretty much since the year 2000, it's had 2 visible downward and upward trends. Then when I drill into this in a 5-year chart, we can see that the same idea has happened, also with 2 visible downward and upward trends within a shorter time frame. So just because we know that the market does cycle, that doesn't mean that we know exactly when to clearly identify points to jump in and out of the market. This section is just purely for fun and speculation, but is there anything that I can do here that helps better identify a better time to buy into stocks? I'm trying to use a bit of technical analysis with a combination of economic indicators to guess the direction of the market. And why would I try and do this? Well, for me personally right now, I'm sitting on about 10% cash, which I do want to funnel into the market. I also want to be really greedy and buy when stocks are at crazy low prices. There are a lot of stocks on sale, but I'm looking for stocks that meet my criteria, mostly dividend stocks close to 4% yield, but also if my growth exposure gets further destroyed, I'll be looking to jump into more growth stocks as well. I class this situation as a win-win situation because if I somehow guess this correct and the market goes down to where I deem it reasonable and I get the correct prices, then that's a win situation there. And if I get it totally wrong and the market goes to new all-time highs, well, I've got 90% of my money invested and I'll reap the rewards either way. Looking at the S&P 500 chart, I've identified that there's been a widening upward trend over the last 8 or so years, and it does go back longer. Over this time, it has broken above and below trend a few times, and recently it looks like the market has topped out and has the potential to create a double head and shoulders pattern. This move is about 75% complete, and if it does, it'll bring us down to about 3,900 on the S&P 500, which is where I would like to start nibbling at some more stocks. If the trend continues to fall, I'd be happy to go more heavy in the 3,600 to 3,900 range. And if it breaks below 3,600 and then it breaks this long-term trend that we've been in, then I'll be putting any fresh capital and dividends that I get into stocks. All I can do in that situation is have to wait. And this is just pure speculation, a bit of fun that I'm just sharing with you here. The economy and stock market are heavily linked together, but are two totally separate entities. It's important to look at the economic data to see if we can get a grasp on the wider picture on how people are earning, spending and saving cash. With US inflation of 7.5% being the highest since February 1982 and UK inflation of 5.5%, the highest recorded since March 1992, this tells us that the consumer is paying higher prices for everyday goods, which does have an overall long-term impact on where people start to put their money and can cause troubling times for families on low income. Oil is at decade-high prices and almost all-time highs. With the world's heavy reliance on oil, this alone will be felt in people's pockets, but also companies will now be having higher input costs, affecting earnings and pushing up prices. With the world reopening, this should be a time of economic boom, but people and businesses won't be able to pay these high prices forever, with the dreaded recession word now coming out of analysts' mouths. One avenue I really want to take this channel down is talking about the emotions attached to investing. How does it make me feel? What's going on in my head? And talking through this on the channel, hoping that it helps others. A statement which I hear quite a lot is, don't get emotional when investing, and for me this phrase is a bit of a generic one which I strongly disagree with. Money, investing and emotions are all interlinked. I class myself as having really good mental health. I'm always positive, full of gratitude, but I'm not protected from the inner thoughts associated with investing. Why did I buy this stock, which 9 times out of 10 is an afterthought after a stock drops 20+%? Or should I have picked this one instead? Whether to sell or keep certain stocks, these inner debates can often create more questions than answers. And investors are investing now in order to reach future goals, to which the journey isn't linear. Investing doesn't protect you from mental illness, depression, anxiety and stress, and there will be people who suffer from mental health problems but also aspire to benefit from investing. The top image shows the full cycle of how individuals with mental health issues struggle to earn money and make decisions, and then when in difficulty find it really challenging to escape this cycle. Earning money and losing money does affect people's overall mental state, and the bottom image gives an example of an individual who tragically took his own life after a breakup and losing his money in Bitcoin. So to say to take emotions out of investing is a bit naive, I feel, and should be reworded to help people understand and conquer their emotions during times of turbulence. YouTube is a fantastic platform, with the investing community being so informative and transparent. I personally have learned so much in the last 4 years of investing just purely through channels on YouTube. It is possible to overwhelm yourself with information during these tough times. You have channels related to value or dividend investing, channels focusing on growth stocks, day trading channels, channels recording the market opening and closing, and all I would say here is to diversify your sources to help allow you to make your own balanced decisions and not to follow others just for the sake of it. I have experienced my portfolio being negative before, and it's something that will happen again even further down the line. These extracts are taken from my broker, which is where it shows my Q3 portfolio value. In October 2018, which is when I was about 3 or 4 months into investing, I was down 9.3% from the capital I put in. In October 2019, I was down 4.7%, an improvement. In October 2020, as we were recovering from the COVID sell-off, I was down 17.4%, giving me a portfolio value at that time about 49k. And in the space of 1 year, my portfolio went from 49k to 92k, with myself putting in about 12,000 of fresh capital. In the space of 1 year, my portfolio very nearly doubled, and what can I take away from this? How tough was it being invested for 3 years and still being negative? And the answer is not very. In this time I've learned so much. I learned by doing things, so I knew myself before even got started that I will try my hardest to improve each day, but that I will make mistakes. Be humble and take these on the chin and learn from it, which I have done. I could watch videos all day about investing, but until I do it myself, I'll never actually learn. I had a long-term outlook at the time which kept me positive, but I also acted in the present. In this time frame of growing a portfolio from 20,000 to very nearly 100,000, what's happened in my day-to-day life? What's changed? And the answer is nothing at all. I still live in the same house, still go to bed in the same bed, still go to the same restaurant, still go to the same holiday destinations, drive the same car. So what I'm trying to get at here is the number on your portfolio shouldn't affect your day-to-day happens and how you go about your day-to-day life. What keeps me super motivated no matter what? It's my always in approach rather than all in approach. I do rotate between the value of stocks and cash that I hold, but I always participate in the market, and through these 4 different scenarios, which are possible, I always have something that ensures I'm building wealth. Scenario 1, when value stocks are going down and growth stocks are going up. The value in the growth stocks should be bringing up my overall portfolio value, but at the same time I'd be buying into the value stocks, meaning that my dividends received would increase. Scenario 2, everything is going down. This is similar to today's environment. I would be buying a mixture of value and growth stocks. My overall portfolio value is going down, but as is to be expected with 2022, this will be a record year for me in dividend payments received. Scenario 3, value stocks go up with growth stocks selling off. My portfolio would probably trend downwards, but not fall off a cliff, and dividend payments would remain stable as I would be buying into the growth weakness. Scenario 4, a bull market. Everything is going up, green everywhere. However, this market doesn't actually suit me, as I would be hesitant into buying both value and growth stocks. My portfolio value would be increasing due to the positive sentiment within the market, but my dividends would probably remain quite stable as I wouldn't be buying a ton of stocks at that time. Through each of these 4 scenarios, I always have a reason to carry a smile on my face and reinforce the message of why I remain invested. Finally, it's important to stick to the long-term plan. This is my aim here, which shows my 10-year ambition of having a portfolio of about £373,000. I would be 40 years old at the time, and this is calculated on investing £6,000 per year and achieving an annual growth rate of 10%. For me, what is the most important number in this graph? And it's the bottom number in the green, which is the total deposits tab, as this is the only number that I can 100% control. I can control what I put into the market. I don't have full control of where the market will go. During this 10-year time frame, I'll be constantly reviewing my strategy to see what's working well and what isn't working, and this will all be here on YouTube for you to see, and I hope you follow me along in this journey. I'm wishing you all the best out there, guys, and I'll catch you all in the next video. Cheers.